And in fact, things are going so well that 576 American banks are overexposed to commercial real estate loans as delinquencies rise. Really? Yeah, really. These are commercial real estate composition and delinquencies. And bottom line is, this is the non-owner occupied non-residential property loans, so the commercial loans that are leasing out. And look at this increase, growing pretty rapidly. The delinquency rate on non-owner occupied non-residential property loans has increased for the past 3 quarters, with the 24 basis point rise in the latest quarter being the largest sequentially since the 20 basis point rise in the fourth quarter of 2020. What was happening in the fourth quarter of 2020? Oh, yeah. Oh, the pandemic. So supposedly everything is hunky-dory, and yet we're seeing delinquency rates at the same rate as during a global flippin' pandemic. Do you feel like everything is hunky-dory? Because I do not. But hey, the stock market's going up, and most people, all they do is they open up their statements, their 401k, their IRA, their brokerage statements, and as long as everything looks okay, they pay no more attention. So all of these things are happening and more. If this is what's happening on the surface, because what's happened to all those CRE loans, those commercial real estate loans, those too have been put into packages and sold. And I've shown you before where, hey, you want distribution? You want to get your money back? Boom. Nope. Can't have it. What are you going to do? Who are you going to call? Did you read your prospectus, which is your contract? Because you didn't write it, they wrote it. And whose benefit do you think they wrote it in? Now, billionaire Sterling, see Category 5 hurricane spurred by Fed rate hikes. This was just, and he's part of Starwood. He's the Starwood chairman. And they are all about real estate. So this just came out July 20th, a few days, not that long ago, when everybody's saying everything is hunky-dory and stock markets are flying and gold is getting whacked. I mean, I think it's really interesting that he's saying prepare for a Category 5 hurricane. The real estate complex, we don't explode overnight. We explode in a series of explosions over the next year and a half as loans mature and people can't pay them off or choose not to pay them off. Starwood has walked away from lots of deals. And that means that the banks are left holding the bag and the investors are left holding the bag. Do you want to be left holding the bag? Do you have any REITs? You might want to check those out. And if you have the ability to liquidate, you do what you're comfortable with. But I wouldn't be holding any of that garbage because I've shown you before where they just said, nope, can't have your money. And then a deep recession. Yes, the longer they postpone this, the worse it's going to be. A deep recession? Oh, I don't know. How about a hyperinflationary depression? Because that's really what we're headed toward. And that will force a full percentage point Fed cut. And this is from DoubleLine. So, again, billionaires, these are insiders. And they're saying Category 5 hurricane, deep recession. You got to decide who you believe. But do we have any rose-colored glasses? Do you have rose-colored glasses? We suggest you remove them. You could see 400 to 500 or 500 banks that could fail, he said, and they will have to sell. There will also be a great opportunity. Absolutely. If you are in the right place at the right time with the right asset, it will be a fabulous opportunity. But if 400 or 500 banks fail, and they only have not even $24 billion in their DIF fund, to support that DIF deposit insurance fund, you see a problem? Because back in 2008, 9, 10, the FDIC said if even one more little bank, small bank fails, everybody's going to know that we don't have the money. How vulnerable are you to this? How vulnerable? Fed Chair Powell, we likely won't be cutting rates until next year. Well, the market has been saying, yeah, they're going to cut sooner. That's why it's flying, because they don't believe the Fed anymore. And with everything that's been going on with the Bank of Japan and the Fed and the ECB, no more forward guidance. The markets don't believe them. They gave that away a year ago in June. And what do we have? The gold price directionless, as Powell says, rate cuts are a couple years out, because give me interest on something that has no value over utility that is used in every sector of the global economy. Certainly, I only care that gold doesn't pay me interest. Gold doesn't have to pay you interest. It's the safest thing that you can do. It's been safe for 6,000 years. And it's global, and it's universal. And there's always demand. So garbage on this. When you look at the spot market, all you are looking at is a trading market. That's all you're looking at. Because Wall Street has turned everything into a trading commodity. Clearly, Wall Street is far more important than Main Street. If you didn't know it before, didn't you just notice what happened in 2008? Didn't you notice what happened in March? Hello. But let's look at a little bit more of the truth. This. I know people will say, oh, but, you only want to sell this, and oh, you're a gold broker, blah, blah, blah. The reality is I have been on all these different markets, so I understand the language of the markets, and I understand the technical language of the markets. And what did my father always say? Do what I say, but not what I do. And what did I say back to him? Daddy, that makes no sense to me. So I watch the central banks and what they're doing, because who knows more about money than they do? And they're buying gold hand over fist. Are they buying ETFs or digital gold or spot gold? No, they are not. They are buying physical gold. Now, they're not buying it in this form because they're central banks. So they're buying bullion. But what are the ones that rule the central banks? What are the 1%ers do? They're looking at this. This is the ultra rarities. So key dates and ultra rarities. And look at this beautiful cup formation. And what happened when they broke out? New highs in collectible golds in the physical only market, because this is a true reflection of supply and demand. The spot market, is simply a reflection of what the government and the central banks want you to believe. But it is a flippin' lie. I can't create more of these. Nobody can create more of these. But you can create as much spot gold that does not nor ever will exist as you want. This is showing you what's really happening in the gold market. Are you getting on board, or are you going to believe their lies? That's entirely up to you. Because I personally believe that you should always do what the smartest guys on any given topics are doing for themselves. I'm buying collectibles. I don't buy bullion because I think we're going to see a confiscation. But that's up to you. I like it. What if I'm right? What if I'm wrong? If I do a collectible and it's so far below the true fundamental value, I'm getting all of this protection at a bargain basement price. And I hold it and I own it outright, and they can't say no to me. Could they confiscate? Sure. Governments can do anything that they want, and desperate governments do desperate things. And we've been witnessing around the world, though they'll call it a levy, or they'll call it this, or they'll call it that. They have been confiscating. And what do you think inflation is? Inflation is a massive confiscation. And we just go along with it? No, we do this. We don't go along with it.